Welcome to Finance Gan Plus YouTube channel. Today I have brought a problem related with working capital management. Now let's see the problem here. Uh, Himal Steel Company is trying to determine the effect of its inventory turnover ratio and days sales outstanding on its cash flow cycle. Himal's 2009 sales all on credit were rupees 1,50,000 and it earned a net profit of 6% or rupees 9,000. The cost of goods sold equals 85% of sales. It turned over its inventory 6 times during the year and its DSO was 36.5 days. The firm had fixed asset totaling rupees 35,000. Himal's payable deferral period is 40 days. Assume there are 360 days in a year. So these are the informations given for calculating different requirements here. Now let's see here. Calculate Himal's operating cycle, calculate Himal's cash conversion cycle, calculate Himal's investment in receivable, calculate the amount of working capital. So here now you have to find these 4 items from the informations given here. Now let's solve this. So first of all, let's write given. So here given is your credit sales. Himal's credit sales. Himal's credit sales, that is rupees 1,50,000. Net profit that is 6% or rupees 9,000. Cost of goods sold that is, you can write shortly as COG, that is 85% of credit sales. Okay, so here now inventory turnover ratio, that is 6 times. DSO, days sales outstanding, DSO, this is 36.5 days. Fixed asset is given here 35,000. So fixed asset, you can write it given fixed assets, that is 35,000. Payable deferral period. Himal's payable deferral period is 40 days. Payable deferral period, it is 40 days. So again, assume that 360 days in a year, that is 360 days. So these are the informations given here. Now by using these informations, you have to find the different requirements here. You have to find here operating cycle, cash conversion cycle, investment in receivables, and amount of working capital. So let's solve this. So first one is operating cycle. Calculation of operating cycle. See, so here now for calculating the operating cycle OC equals to inventory conversion period, or you can write shortly here ICP, just like inventory conversion period, that is ICP, plus receivable conversion period, or you can say days sales outstanding. Receivable conversion period, or you can shortly write it as RCP or DSO. So receivable conversion period and DSO means same thing, okay? Same, it has the same meaning. So days sales outstanding can be also called as receivable conversion period. So here inventory conversion period, to find inventory conversion period, here days in a year divided by inventory turnover ratio plus DSO. Okay, so now put the values. Days in a year 360 days divided by inventory turnover ratio, here 6 times, plus days sales outstanding 36.5. So that will be your 96.5 days. So operating cycle of this Iman company is 96.5 days. Now after finding the operating cycle, you have to find the cash conversion cycle. So here we calculation of cash conversion cycle. So cash conversion cycle, shortly you can write here CCC, so equal to, cash conversion cycle is equal to operating cycle minus payable deferral period. Operating cycle minus payable deferral period. Operating cycle you have already found here. So minus payable deferral period will give you cash conversion cycle. So operating cycle is your 96.5 minus payable deferral period, it's given here 40 days. So your cash conversion cycle is 56.5 days. Okay, so cash conversion cycle you can get by subtracting payable deferral period from operating cycle. Now next you have to find is investment in account receivable. Calculation of investment in account receivable. So to find the investment in account receivable, you have to use days sales outstanding. Okay, so DSO, days sales outstanding, equal to account receivable into days in a year upon credit sales. So this is the formula for finding the DSO. So here you have DSO is given in the question, 36.5 equal to account receivable into days in a year 360, and credit sales is 1,50,000. Okay, so now account receivable equal to 36.5 into 1,50,000. This will go and multiply here, divide by 360. So now you have here that is rupees 15,208.33 is the account receivable, or exactly you can write again here, account receivable equal to rupees 15,208.33 is the account receivable of this Himal company, which has a days sales outstanding 36.5 days. Now after you find this, next you have to find is the working capital. So amount of working capital, calculation of working capital, or amount of working capital, WC you can write here. So working capital WC equals to, now to find the working capital you have to use the cash conversion cycle and cost of goods sold per day. Okay, so here cash conversion cycle into cost of goods sold per day. So here you don't know the cost of goods sold per day, so you have to find in working note cost of goods sold per day, or you can say COG per day. So here cost of goods sold is 85% of the credit sales. So 85% of credit sales, you can find above also, thus you can find here also. So of credit sales divided by number of days, 360 days. Okay, number of days 360 in a year. So here that is 354.167. So your cost of goods sold per day is 354.167 rupees. So here now cash conversion cycle you have found here 56.5 into your cost of goods sold per day is 354.167. So that will give you rupees 20,010.41. So this is the working capital of Himal company. So now in this way you have to solve this problem. So if you like my videos, please like, share and subscribe.